Welcome to Open House, the real estate and mortgage show on News Talk 580 CFRA.
If you have any questions about mortgages or real estate, give us a call at 521-TALK. That's 521-8255.
Or text 1-800-580-CFRA.
With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
Welcome to summer. How spectacular is this?
What a great day. And, I was going to do it at the birthdays, but I'll do it now. Very, very, very good friends of ours, Alfio and Carla. Their daughter's getting married today. And talk about, you pick October 19th. You never know what you're going to get weather-wise. Look at this beautiful day she got. So congratulations to Alessandra and Stefano, who are tying the knot later on today.
Irish?
Good German couple.
German,
yeah. Good German couple.
Yeah, Alfio's wallet's going to lighten up a little bit today. The drywall king's about to...
Hopefully he teaches you where a wallet actually is, but whatever.
Open bar?
Open bar, definitely.
Boy.
Italian wedding?
I wouldn't invite Frank with an open bar.
Yeah, I'm a big drinker. We asked for a scotch. Have some nice single malt scotch, which I know Alfio will have for us. So
good day to look at homes today, boy.
It is a beautiful day. When we get weather like this, it actually brings out the optimism for people, right? They still put their focus on buying and selling properties, and we've had some good weather, and I think we had a good, look at the last 2 years in winter. We've had a very mild winter the last 2 years, and I think we're probably going to have a similar winter this year. And, you go from, maybe late December, January, and February to the market really starting to slow down to potentially picking up. And we saw that last year, and we're going to see it again this year as well. So
it's so much nicer than Toronto.
Now, Steve only says that because his lovely daughter is in the studio, who's a realtor from Toronto.
And it's so nice to have a really good real estate agent in the studio.
It is. Like, we finally have a real estate agent on the show who knows something, right? I mean, it's
welcome,
so nice.
Erin.
Must be
thank you.
Got to be my jeans.
Yeah, must be your jeans. Yeah. Are those Levi's? Oh, sorry, your jeans. Oh, those jeans.
You better get your shout out done now.
Oh, yeah. Oh, well, just my daughter's listening this morning. So good morning. Good morning, Kiara. Thank you for tuning in.
Good morning, Kiara. Nice.
If you count Erin, that's 2 listeners extra this week.
That's right. Now, Erin's here for a reason, obviously, because it's the old man's birthday, right? Steve's birthday was this week.
Happy birthday.
It was.
Oh,
you know what?
Who do you think I was talking about?
I got a good idea. I'll give away 2 cents tickets to a game coming up. Email, who should we email? Email me.
Okay.
FrankN@mortgagebrokersottawa.com. Is Steve 55, 66, or 77 today?
Wow,
we won't say the number.
That's easy.
How does he sound?
How about how I feel?
Wow.
Yeah.
I didn't say 88.
Keep going up.
I didn't say 88.
But you know what? Since we have Erin on the show, it might be, sorry to put you on the spot, Erin,
that's
but
totally fine.
It might be a good opportunity because I always talk about what goes on in the Ottawa real estate market, and I'd love to hear what's sort of going on in the Toronto real estate market.
Yeah, we're buying condos, huh?
Oh, God, if you want to buy a condo, now is the time.
There's lots on the market. Is that why you're saying that?
A lot of inventory. A lot of investors have kind of pulled out. So we've got a lot of those kind of smaller, less expensive units that are sitting on the market.
But, Erin, you say that. We have, the government wants to bring in upwards of 500,000 immigrants every year to Canada, and a good chunk come to Toronto.
Yeah.
I mean, I don't know the exact number, but I would say minimum half are going to Toronto of those 500,000. So let's say there's between 250 and 300,000 immigrants every year coming to Toronto. And we know that immigrants nowadays are coming with some money.
Yeah.
They're coming with suitcases are now Louis Vuitton, not just suitcases. Why is there homes for sale in Toronto then if there's so many immigrants coming and there's so many towers per capita?
Yeah.
There's more cranes in the sky in Toronto than anywhere in the world.
Yeah, I really don't know, but I think a lot of people when coming to Toronto are not they're not buying immediately, and we have such a huge investor market. There were so many people buying for that purpose, and now things aren't cash flowing, so people are pulling out, and there's just too much on the market.
Yeah, that's exactly what's happened because even though a lot of them were built post 2016 or 2018?
2018.
Post 2018, and you can only increase the rent so much before it's like you have nobody that's going to rent it. I mean, you can't rent a one-bedroom for $4,000, which is what it costs.
Yeah, and mortgages are renewing now, and people, the rents aren't covering it. So and anybody who bought pre-construction before the rent or the mortgage rate increases are,
And a lot of people aren't working downtown either, right? So they're working 2 or 3 days. So they'll sacrifice making, the transit, using the transit system versus overpaying to stay downtown.
There's a lot of people that are moving to Toronto that actually aren't living in Toronto now. They're living in the outskirts. You have the Ajax, the Pickerings, the Barries, and all those. They're going through the
outskirts get further and further.
They do. Well, their outskirts have actually come to Ottawa now. Outskirts of Toronto is now Ottawa. Yeah. And Erin, you were saying this morning that you're sort of not one of these agents that are actually coming to Ottawa. But we had, especially through the pandemic, we had a large chunk of Toronto agents who were coming to Ottawa, even with clients to buy properties. And it was because it was so affordable here in Ottawa, and it still is compared to Toronto. And when we think of all the immigrants coming to Toronto, you got to wonder why they're going to Toronto. I know the job opportunity is better, but the prices are through the roof. Like
their families, maybe they have family there, or you got multiple families getting together and renting a house together to keep it affordable. I think
Toronto is a melting pot too, right? I mean, there's lots of different nationalities and races in Toronto, and so you're getting lots of immigrants going to Toronto. But affordability wise, I mean, why wouldn't you come to Montreal? Why wouldn't you come to Ottawa?
Well, apparently you can buy a condo pretty cheap now.
Yeah.
What is cheap, by the way, for a condo?
Oh, God. Prices have dropped substantially. I just sold a
closet?
Actually, not a closet. It was just over 700 square feet for a one-bedroom. We sold it for $625.
Sounds reasonable.
That would be in the fours here.
Yeah.
Right? So
but it would have been a lot more in Toronto.
It would have been a lot more. So we're seeing actually a glut of condos on the market in Toronto. And
how about here?
We still see a glut. We're still over 5,000 listings on the market, and about 1,000 of those, just under 1,000 of those are actually condos. At one point we were down at 400 condos on the market, but we are also at one point back in 2016, 17, 18, we were at 2,300 condos on the market, which was a flood of condos. So
that was brutal here.
That was brutal for a while, and there was a lot of builders who actually pulled back a little bit on building condos, and there was lots of people who are promoting, let's buy condos, it'll be a great investment in 2 years. Well, the problem being is everyone took possession in 2 years. People tried to sell and cash in their investment. Well, when you have 10, 15, 20, 50, 60 people trying to sell in the building, what happens to prices? There's tons of supply, the demand goes down. So we saw prices going down in condos. And for the longest time, I would walk into a condo building and they'd be like, okay, excuse me, we're looking to sell. We paid $430 for it. What's it worth today? And I'd have to say, listen, I'm really sorry, but your condo's worth about $350 to $360, and there was people
if you're lucky. Yeah.
If you're lucky. So then what happens then? So then people who are trying to sell their condo are like, well, I can't lose that much money on my condo. I'm going to rent it. Well, so was everybody's idea. So now you have 16, 20, 25, 40 rentals on the market in that one building. And what does it do to rental prices? It drives down rental prices. So at one point here in Ottawa, condos were not a great investment. And they've flipped that. They have flipped that. And there are some great buildings and some great condos right now in Ottawa that make it a little bit more affordable. But
still tough to cash flow, though.
It's very hard to cash flow. Anywhere in Ottawa right now, and I couldn't even imagine Toronto, but anywhere in Ottawa, trying to cash flow on an investment is really, really, really tough. But as the rates come down and the prices stabilize a little bit, we might start seeing a few more things cash flow positive, and we might start getting some of those investors back in the market. And we've been saying ad nauseum that a third of our market is first-time home buyers, and then the other chunk will make up to about half our market will be investors. So now we have first-time home buyers and investors making up about 50% of our market, and they are slowly starting to come back into this market. We got a rate announcement this week, and Frank will talk about that, but we're hoping 0.5% down, which will hopefully bring more people back into that market, which will, and then in turn get more people back into the market, which will get product moving, which will probably increase prices, but just very moderately over the next 3, 4, 5, 6 months.
So inflation is at 1.6%.
Isn't that an incredible number? And if you take away shelter, you know what happens, eh?
What's that?
Less than 1% for inflation.
Should they blow it?
No, but it puts a lot of pressure on Tip Macklem, I think, to make sure that he does the right thing this week, which is the half point. There's still about 20% of economists that think it might be a quarter point, but most of them are leaning towards the half point, and there's even a few of them that think he should do 3/4 of a point. So that's how crazy the gap is, but that's what inflation's done. The problem is the unemployment number went down as opposed to going up. Because if that had gone up, then it would be between 1/2 and 3/4, but now it's likely going to be 0.5%.
How bad, or not bad, how much is the American job report last week or the week before
did
coming
major
to effect?
Damage.
It did major damage.
Major damage for interest rates on fixed mortgages, because we saw the fixed mortgage rates go up by 0.25 point. Now, we think it's a blip. There's a big event happening November 5th south of the border.
Gee, what could that be?
So because of that event, all of a sudden, the job numbers were extremely healthy. So I haven't seen the revision
skewed a
yet.
little bit?
They're skewed a lot.
Yeah.
There's some economists that think that was probably double what it truly was. So that's how much it was skewed by.
Do you guys remember last week or the week before I was talking about I'm reading the Obama book right now, and he was saying when he basically came into power, the month before coming into power, there's a job report that came out that said that the states had lost, it was something like 280,000 jobs. And then once the inauguration came and he was now the president of the United States, it was actually 480 some jobs that they had lost. So I'm like, that's not a little difference. That's a big difference. So this is probably going to be the exact same thing.
Job numbers are always accurate, though.
I don't know how they even figure that out. Got to be honest with you.
I think people could hear Frank's facial expression there.
Yeah, I think so too.
Speaking of Casey. Paul is closer to 55 than Steve is. Way closer. So,
what?
Age-wise. Paul is closer to 55 than Steve is.
Oh, way closer.
Yeah.
I don't know. I wouldn't say way
wrong
closer.
answer, but thank you. And Karen, you got to try and guess Steve's age. You don't get to say how much you love our show.
Before we go to break, though, I something that was really funny as we're getting on air. His daughter Erin was telling us a story how she used to go to school. And all the teachers were in love with Steve Gregory. And they're like,
they still call.
Your dad is Steve Gregory, the hero. And I must admit, when you're listening to the radio, when you hear Steve Gregory's voice, I could see how he was a chick magnet.
I get it.
Sure.
My whole childhood.
Yeah.
Kiara, you see how they really get a hold of your granddad and just make a mess of him every
Seriously?
521-TALK, 521-8255. We'll be right back.
It's show on News Talk 580 CFRA.
Welcome back to the show. All right, new builds are down 10% from last year. Is this going to change if interest rates come down?
Oh, I think it will. I mean, we've had, when we've had Charles on the show from Clement Homes, there you go, Frank. Throw it in there, Clement Homes. So when we had Charles on the show, and this is nothing new, they talked about the cost of getting shovels in the ground as well as the red tape getting shovels in the ground. So there's no doubt new home building is down 10%. The problem being is we need to be up 1,000% to take care of all the immigrants coming here.
So then lower interest rates won't matter if they don't get those development costs down.
Well,
you're right.
But
it's a little part of it, but it's the development cost.
The problem is you need a builder with deep pockets to be able to build in today's market. Because keep in mind, not all builders have the cash to start these subdivisions. Like I look at Charles, for example, he's got a couple subdivisions we have on the go right now. He's financed a lot of this. And when you're financing it and your rates are not at 1 and 2 and 3%, they're at 7, 8, and 9%, even though he's selling this product. But when you're financing all this product at those high rates, you got to get them sold quick.
Well, you got to carry that for a long time.
You have to carry it for a long time, and that's the problem. I mean, we've been in Embarreur now for almost 2 years selling this product, and he was a year before that. And then you got Rockland going on with all these townhomes. He's carrying a lot of product and paying the finance fees on all this product. There's a lot of builders that can't do that, and that's why we're not seeing a lot of building going on is because of the interest rates. So it's the red tape. It's, the cost of holding all this product and actually getting shovels in the ground is the biggest issue. But when you're looking at rates coming down, that might alleviate part of the problem. Obviously, the other part is getting shovels in the ground and the bureaucracy that comes with that crap. And unless we can alleviate that and gets rates down, we're not seeing building going on. And there's only so many builders in Ottawa that can afford to build right now. And there's a lot of medium-sized and small-sized builders that just can't afford to build right now. So they're on the sidelines, much like first-time home buyers, much like investors. And I think if we can get the rates down, it's one check that we can go towards getting shovels in the ground and getting builders to start building again.
Even with all the help from the government?
Well, there's no help, and that's the problem. And listen, I'll be honest, because I'm lucky to deal with some builders, and some of my friends are small builders. They'll build, anywhere from 10 to 40 units a year, and they're small builders. And even they say it's, the government's come out and saying, oh, we're making it easier to build. Well, that is, I can't say the words on the radio, but that's hogwash. It's not easier to build. And I think Charles actually said that when he was on the radio. He said, it's not easy to build right now. It's lucky.
Tougher than it was 10, 20 years ago.
It's way tougher. And I look at some of the places in the States where it's like, you want to build? check, you're good to go. Go ahead and build. We're here in Ottawa. It's not like that. I mean, you can have some raw land. I mean, we're talking about even now his new subdivision in Rockland. They have he still doesn't have street names. Like it's Street B and Street A and this and that. And he's been waiting for months just for street names. So you can imagine what permits take, what all the bureaucracy that comes with the government, how long things like that take when you can't even get street names.
A lot of
in a
that is
timely fashion.
understaffing, right?
It's total understaffing, but it's understaffing, but it's also nobody wants to work anymore, right? Yeah. So it's a double whammy and a bit of both. Is that you have understaffing, and unless we can get these shovels in the ground, it's great for these politicians to come on and say we need homes. Well, that's great, but you're the reason we don't have homes. So do something about it. Let shovels get in the ground a lot easier. Take care of some of that red tape. Oh, and get rid of this. Let's lower some of these interest rates as well, so we can start getting builders who have deep pockets but not deep enough to get shovels in the ground.
All levels of government have got to get together before they make any announcements.
They won't. You got liberal, federal. You got provincial, conservatives. And depending on the province you're in, it's all different parties. Why would they get together? And then municipals.
But if they're serious about the housing crisis, they've got to get together.
One of the not funny thing. One of the things I've really learned a lot more about reading this Obama book. Now, I know it's the American system, but one of the things I've really learned a lot more about is how hard it is when you're the president of the United States or the prime minister of Ottawa to
Canada.
Get anything. What did I say?
Ottawa.
Sorry, Canada.
That's Steve, by the way.
That's right. You're the Prime Minister of Ottawa. Sorry. The Prime Minister of Canada or the President of the United States, how hard it is when you're constantly battling different parties. Like, why don't they work together for consumers, for people, for their...
Well, you're seeing a lot of that in the States right now.
Yeah. But the problem is no one works together to make things easier. And we've been talking about for the longest time, we need homes in Canada. We need homes in Ontario. We need homes in Ottawa. We've been talking about this for the longest time. And I'm really getting sick of the government saying, we're making it easier. No, You're not. You're just not.
How difficult is it to build your own house these days?
Financially?
Yeah.
Lots of money up front. You're not getting... There are banks and lenders that will lend you on the land, but only if you 100% have started digging. They're not going to give you... it's very difficult to get just a land loan. So
if you own the land...
If you own the land, all of a sudden now you've got an advantage. But you got to get you pretty well got to get the foundation in place before you can really start borrowing. Can you borrow on the land? Sure you can. You got to keep in mind, it's very upfront costs when it comes to building a home. So it's not on the back end, it's on the front end. So you got a lot of banks that are nervous about doing construction financing because they're nervous that the client's going to run out of money. So the bank's attitude is, listen, if you're building a house that's going to cost you $1 million and the land's $300,000 and then the house is $700,000 and you need $400,000, you put the first $600,000 in, we'll put the last $400,000 in because now our risk level is way down.
So there's no more draws like there used to be?
There is draws, but the draws, so in other words, a bank expects you to have your lot paid, and if it's not paid, that's okay, but they're only going to give you money once the house is enclosed. So in other words, you got doors and windows installed, you got the roof is shingled, and it's framed so that it's enclosed. The house is enclosed.
Before you get any money. Draw?
Correct. And now you're at 35% completion. But if for anybody that's ever built a home, to get to that level, you've probably gone through 60% of your money because you got to put deposits on kitchens. You got to put deposits on everything for it to happen. So that's why you need to have money up front. Once in a while, I'll get a call from somebody saying, listen, I've got 5% down. I want to build my own home. Impossible. It's not going to happen. Like, don't even think about it because it's not going to happen. You need to build some equity. You need to have a lot of cash up front or access to cash. So I've had scenarios where, two young people come in and they want to build a house and they've got $150,000, but even that's not enough to start going. So in many cases, they've got parents that have homes that are paid for. So what we'll do is we'll secure a home equity line of credit on the parents' home so that they have access to that home equity line of credit to be able to build a home and get as far as they can. And then we can either do a takeout mortgage or a construction mortgage at that point. But you need to have quite a bit of money up front to be able to build a house and get financing for it.
It's always been like that. It's very, very difficult.
It's gotten tighter. Over the years, it's gotten tighter because there's more nervousness on behalf of the financial institutions.
Yeah.
521-TALK, 521-8255. We will be right back.
On News Talk 580 CFRA.
So glad I only have a birthday once a year.
Could we actually? It's Frank N at mortgagebrokersottawa.com. If you want to get in on the Stevie
Steve's birthday.
sweepstakes birthday. Frank is giving away a pair of Sens tickets to an upcoming game. If you can guess his age, and it was 55
or 66
or 77. So if you and you know what, it does go a long way when some ladies are out there saying, "Is Steve single?
Yeah,
Steve's so handsome." So
Yeah, the beauty of radio.
Yeah. So guess the age, and then of course tell Steve how handsome and good looking he is, and you
Do
have,
that first,
and
actually.
you have
Yeah,
your
yeah.
chance to win Frank's seats at a upcoming Sens.
I
game.
noticed you didn't come up with any prize here.
Oh, jeez, are you kidding me?
Well, I could put my name in that, but where Frank's seats are, I get nosebleeds way up there.
Yeah.
So you know.
No, my seats are just above yours. But anyway, alligator arms there, Paul Rushforth won't.
Okay, so Wednesday is the big day.
Wednesday's a huge day.
So then
Massive
we've got
day.
December. So we got
December 11th.
2 more this year, and then we go January, March, April, and June. What do you think is going to happen through to June?
So if I had to guess on all 6 announcements, I'd say 2 percentage points lower than it is today.
That's it, eh?
Only 2? I thought it'd be more than
I
that.
thought it'd be more too.
By June. I'm not saying it's going to stop into the fall.
Right.
Because don't forget, we got an election in the fall, so I
And then maybe
think
one
they'll
here
save
soon,
some
too.
of those.
Don't you think we're going to be 1 before the end of this year?
Yeah.
And maybe 1.5 by the end of January?
Mm,
Because we should get a half.
I
In January
think
as
so,
well.
but I think that's where it's going to slow down. I think if he did a half, and a half, I think then he'll slow down. Then he'll do, out of the next 3, maybe he'll do 2 quarters out of that. So, but we'll see. I mean, depending on what the numbers.
We're a point difference right now between a 5-year fixed and a variable. So where
about
would,
a point and a quarter
so
now.
where
that
would
the
that
fixed
put
rates
us
have gone
now?
up.
Where would that put us?
Well,
then
by the end
spring?
of, if December 11th was another half point and this week was a half point, we'd be within a quarter point between an adjustable variable and a fix. So
you'd be halfway. You'd be about 4.25, right?
you should be about, depending on your circumstances. Again, you get a much better rate if you're buying and it's either less than 20% down or 35% down or more. That's where you get the premium rate with a 25-year amortization. If you go to 30-year amortization, then it becomes a little bit more expensive usually. But
the rate becomes more expensive, or the CMHC fees?
The CMHC fee is more expensive. So 30-year amortization, the default insurance, CMHC has actually fallen to third of all the default insurers. They pulled out. They badly made mistakes on pulling back the way they did, and unfortunately for them, Sagen and Canada Guarantee have got the bigger market share now. So. But 4.2% is the 30-year amortization with 5% down, and it's 4% if it's 25-year amortization. And we don't know about the rates yet, but we think the rates will be very similar. But again, it doesn't happen until December 15th. So for anybody buying too, we've had clients call us and ask, so we're going to buy, we're going to set the closing date for January 10th. So can we get the 30-year amortization? The answer is yes, but you can't. So we can't approve it on 30-year amortization until December 15th. So I even had somebody say, well, then I'll set my closing date for the 16th. I said, it's still not going to work because we can't even submit it for 30-year amortization until the 15th of December. So what that means is that if you want the 30-year amortization, you can qualify on the 25-year and we can change it, but the closing date needs to be, probably late first week, second week of January.
Frank, so you're saying that potentially by June we're down 2%, but
so today we're at 6.45.
Yeah.
That means prime would be at 4.45, and if you're getting prime minus 90, you'd be at 3.5, 3.55,
which is attractive,
which is much more reasonable.
But I think what people I've talked to a few people this week that are like, yeah, we're definitely interested in buying, but we're going to wait till the rates come down. But we have an announcement next week or this week coming. We have an announcement in December. We have another one in January, which I personally think, and I think Frank's can corroborate this, that we're going to be down about 1.5. You can hold a rate for 120 days. I would be.
It's not about that.
But I would be getting my rate held sooner than later, getting into a variable, and start shopping now. Because what we are going to see is if by December, if we're down a full point, and by January we're down 1.5, we are going to see a very strong start to 2025. And you could be too late if you're not getting in the market now. We do have healthy inventory on the market right now. And if you can get a rate lock now, get into the market sooner than later, buy something sooner than later, you have lots of opportunity, your rates are coming down, and you're going to get something for a good price. That home you're looking at right now could be 10, 20, 40, 60, $100,000 more in the next 6 to 8 months if you don't get in sooner than later, is my opinion.
Yeah, just to
you don't really
clarify,
need
though,
a-
on the interest rates, and why it doesn't – if you're taking an adjustable variable, keep in mind, so when you get a fixed rate, you want to lock in for 120 days, you're locking in at a rate. So let's say we can get you 4.49. We're locking in the 4.49 for 120 days, and if the rates get better, then you'll get the lower rate if they come down. But if they go up, you're guaranteed the 4.49. It's a similar process when it comes to the adjustable variable, except for what we're locking in is the variance. Because we don't have control over the prime. The Bank of Canada and the banks dictate what the prime is. So we would be locking in the prime minus 90, prime minus 95. And if you bought a house and the house closed in February, well, if you're getting prime minus 90 right now, it's 645, you're at 555. So if the prime minus 90 was the best over the 120 days, that's what you get. And as prime rate comes down. So I had a client call me and say, Frank, why don't we wait till Thursday to get the approval? This way we can get the lower rate. And I said, we don't have to, because you're getting the prime minus 90, so the prime will automatically change and your rate will change with it. We don't have to lock that in. We're locking in the variance. If the variance changes, it goes to prime minus 1.
I didn't realize that.
Yeah,
that you
so
could
if the
lock it in.
variance changes.
You've been doing the show for almost 20 years.
Not the variance, though.
Yes,
Yes.
it's the variance we're
That's what
locking
you're
in when it
locking
comes
in.
to an adjustable variable rate mortgage. So, and again, the difference between adjustable and variable, everything is the same except for the only difference. If you're taking a variable rate mortgage, your payment is set at the time of closing based on what the prime is and the variance, and then your payment is set at that. So if interest rates go down or go up, your payment stays the same. If they go down, good news is you're paying more towards your principal. If they go up, like many Canadians are going to experience when they get the renewal this summer and next fall coming, they're going to see that their amortization may have started at 25, but because the interest rates went up as significantly as they did over the last 2 years and their payments never changed, they might see that their amortization is up to 45, 50 years, and they're going to freak out because a lot of people just don't have the financial knowledge to understand how it works, and they're going to be shocked, absolutely shocked that their amortization is up as much.
And what happens when your amortization goes to 45?
Well, this is where we're waiting for the government. So we haven't had a lot of these come up yet, but as more of them come up now, we're going to have some Canadians showing some stress over the fact that they can't believe that they weren't advised that their amortization was going up as much as it has. And then right now, the lender's supposed to get back to 25-year amortization or 20-year if you've been through 5 years. So, but those payments might be too significant. They might go up too much for them. So we're waiting for the government. Right now, they've already said to the lenders, you can make some exceptions at 35-year amortization right now, but we think that 35 may not be enough when, again, because anybody that's come up in the last year or so, they got their house for relatively good price and the value has gone up tremendously. We're going to start to see, we're still about a year and a half away, maybe 2 years, but when those people bought the homes in 2022, when they capped out, all of a sudden the value hasn't gone up as much. So therefore, they don't have that equity built like anybody has today.
They
that's
may,
coming
though.
up for renewal.
They
might, but we
might.
don't know yet,
Yeah,
right?
yeah.
So right now, it's not as significant as what we're seeing now, where somebody bought a house 5 years ago with 5% down. They now have 40% equity in their home. It's absolutely amazing. So therefore, they can refinance, get to a 30-year amortization, even though the rates are higher, and keep their payments relatively close to where they are today so they can stay in their home.
And keep in mind, people, when they bought back in early 2022, I mean, we had an average sale price in Ottawa of $740,000. We're now at $680,000. So we've seen our average sale price come down in some areas more than others. So you're right. We're hoping over the next couple of years when those mortgages do come due, they've
Values
made
have
up.
gone back
The
up a
values
little bit.
have gone back up to where they need to be for the
Still got a cash flow.
Yeah. But listen, the worst calls we get right now are people who are bought in Jan, Feb, March, and April of 2022. Those calls suck because we're like, well, do you have to sell right now? Because if you don't have to sell, I don't know if I would. And we've always said real estate's a long-term play, but it's not a long-term play if you get transferred out of town or you have to sell or, there's a reason you have to sell. You can't afford your home anymore. And, those are always the toughest calls. But
Do you see a time where you can only get an adjustable rate mortgage, not a variable, where you get the price locked in?
I hope so. I think OSFI should seriously be looking at that, and I believe they are. They really do, because I think the variable gives false hope to Canadians that are buying a home and are not financially literate, and they just don't understand what they're getting themselves into because the banks don't do a good job of explaining the difference between a variable and an adjustable. So we've never gone through periods like we did in 2022 and 23 where the prime rate went up so significantly in such a short period of time. So, on a normal year, we might see prime rate go up a half or 3/4 of a point. Well, that's acceptable. So your amortization might go up 3, 4, 5 years. Mm-hmm. But when you see it go up 4.5, 4 3/4 percentage points like we saw, all of a sudden you're talking about significant hit on Canadians that had to keep their payments the same because the cost of everything else was so expensive to stay in their home. So they stayed in their home with 5% down. They didn't have a lot of equity, especially if they bought in 2022. Not a lot of equity and maybe negative equity built. So they were forced to keep their payments the way they are. And now they're going to get a renewal in 2 years that's going to show a 40, 45. So, in theory, their payments should have gone up, at least maybe not the whole thing, but there should have been some increases there that at least maintained their amortization maybe to a maximum of 30 or 35 years and not gotten up to
They
50,
should put a
55,
cap on
60.
that, right?
That's what should happen.
So if you're not watching your mortgage closely, you want an adjustable.
The crazy part is annual statements go out to clients, and the amortization, the banks don't put the amortization on there. So they'll tell you what your balance is, but they won't tell you what your remaining amortization is. And a lot of clients that have mortgages with BMO, Royal Bank, TD, and CIBC, who all have variable rate mortgages, are going to be surprised when they get that renewal statement in the mail, and it's going to show them that their amortization's gone up significantly.
And yet when people refinance their homes, that's what they're concerned about, is that amortization.
100%. Well, people still freak out over, I don't want a mortgage for 30 years. And I always say it, just because you take a 30-year amortization doesn't mean you have a mortgage for 30 years. Maybe the 30-year amortization is perfect for the scenario right now where the interest rates are elevated. You've got kids that you might have daycare because you're still at the beginning of your career. So it's okay to start off with a 30-year amortization, keep your payments reasonable. And then as you get further along in life and you've got increases, your kids go to school, you're not paying for daycare, all of a sudden now you can increase the payment and bring that amortization down.
Yeah, you're in control of it.
Total control of it. Don't let the bank control your mortgage. You control your mortgage.
So we have to go to break here, but on the other side of the break, I'd actually like to talk to Mr. Greg Tilley, who's here, who's my photographer, who's been in and out of 40,000 homes. I want to talk to him about some of the things he is seeing, taking photos now at this time of year, some of the worst thing he's seeing and some of the best things that people are doing that are for this time of year, especially when it comes to curb appeal and things like that.
Yeah. And we got to answer one of the listeners asked a question about the stress test. So we'll answer that as well after the break.
How am I doing, Aaron?
Oh, fantastic.
Oh, thank you.
It's his first day on the radio.
Yeah, it's
521 Talk, 521
Any of the teachers listening or what? Your old teachers?
We'll find out.
We'll be right back.
On News Talk 580 CFRA.
Now we're going to play a game called What Does Greg See?
Oh, no. You want me to answer the Paul Zhang one? The
Oh, yeah, go ahead.
Go ahead, because nothing's quick with you, but go ahead.
Yeah, okay. Lots is quick with you, apparently.
Let's go.
So, Paul asks, the rule change where borrowers do not need to requalify when switching lenders on straight renewals. Well, it's not quite, you don't need to qualify. You still need to qualify. It just the stress test gets eliminated. So no longer on a straight renewal do you have to qualify at +2, which is the stress test. Whatever the contract rate is what you qualify at. So you still need to qualify those. So you still need
You
to
don't
go
have to
through.
requalify if you're not changing anything, though.
Yes, you do. Anytime you're going from one lender to another.
Oh, yeah.
you need to
But if you're staying with
requalify.
the same lender,
You're staying with
good.
the same lender. It's just a renewal. Straight renewal. You sign a renewal agreement, negotiate the best rate. You don't have to provide any income, nothing. And hopefully that stays because you never know these days with all the changes they're making. But that should remain. But if you're switching lenders because you can get a better rate somewhere else, you just don't have to go through the stress test. You still got to qualify. You still got to give income documentation, prove that your property taxes are up to date. You still got to do that stuff, and you still need to have good credit. But at the very least, you don't have to qualify at the +2. That's the only difference.
Awesome.
Greg?
Did you want me to ask the question again?
No, I can ask the question. Like right now, Greg, you're going into a lot of properties.
Yep.
And, staggering number. You've been in 40,000 plus homes. But there must be some things that people are doing right now this time of year that are just perfect. And there's other things that people are doing that you walk up and you're like, really? Am I taking pictures of this? Did they forget to do this and forget to do that? Tell me some of the things that are good and bad.
The curb appeal on a home, obviously, when you're pulling up to a home as a buyer, that's the most important thing. It's the first thing you're seeing as you're driving up. So just like the inside, it's got to be clean as possible. And this time of year, leaves raked, gardens turned over properly, like all the dead stuff ripped out of the gardens. Like any of that kind of stuff is going to really put a negative kind of impact on a potential buyer walking up to the front. The other thing you always want to consider too is like, how's your front door look? Like, does it need to be painted? Are there chips missing out of it? Are your handle and your lock mismatched? Like, it's all those little things that are kind of going to cue buyers to say, oh, well, it doesn't look like this home's been maintained. I wonder what else is wrong with it. And that's not the impression you want when people are walking in the home for the first time.
So what would you recommend people do before you show up to take pictures?
Talk to Paul and the rest of our team. Yeah. No, get one of the agents, get your agent in the door, and they'll go through all of that stuff with you and make recommendations.
But what are the musts? Organized, clean.
So organized, decluttered, cleaned. I mean,
smelling nice.
But what I always say to people is you're selling space at the end of the day. So if people walk into the room or walk into the house or even outside and it just feels cluttered and full of stuff, their mind is out of it already because they can't see that their stuff will fit in.
And don't throw it all in the basement, right?
No. Yeah.
But people, keep in mind, people are buying your space. So, for example, in a kitchen, they are going to look in your cupboards. I'm sorry, but they are. In closets, they are going to look in your closets. Someone needs to know that they can put their clothes in your closet. Someone needs to know that all their plates and dishes and all that will fit in these cupboards. So if that's a mess, what else are you hiding that's a mess? So it's little things like that it's no longer your house. When you're selling your house, you're selling a museum. You're really selling a museum, and it has to look absolutely perfect, every single ounce of space in that property. Because as soon as a buyer notices one thing wrong, they're like, what else are they hiding? What else have they just thrown together? So make sure that everything looks perfect, and your curb appeal is what gets people through the door. If your curb appeal sucks, people are not going to come through your door. So make sure that looks absolutely perfect.
The only thing I'd add to that is garage as well, because a lot of people just take everything and stuff it in the garage. Like I've opened doors to look in garages and you can't see anything. Like it's stacked so high with boxes and stuff. People are going to be turned off by that. Oh, my car will never fit in here. Of course it will, But if they can't see it, they're out.
Is it worth getting storage then?
Yes.
Yeah, absolutely. It's worth getting storage. Get some storage space. Declutter as much as possible. A decluttering also helps you the word's not cheat, but helps you maximize on space.
Yeah.
The more space you can show, the bigger the price you can get. So decluttering, cleaning, make sure it smells nice, painting. Those are 4 basic things that you can do to increase the value of your home and get your home sold quicker.
And over the next few months, the competition is going to get a little bit stiffer as the interest rates come down.
So there's more people that are going. And I'm telling
good.
people that why wait till spring to get your home on the market?
Yeah.
Buyers are coming back now. Get your home on the market now and get it sold now. Spring, you're going to have lots of competition on the market. So get your house ready to go now.
Birthdays?
Yeah. My brother-in-law, Tony.
Good German fellow, Tony. Yes.
Celebrating his birthday tomorrow. So happy birthday, T. And again, congratulations to Alessandra and Stefano, who are tying the knot today. So congrats to the parents. They're thrilled.
Amazing.
And do you have a winner of your tickets?
No, we're going to do it next week because obviously people are going to be listening Sunday at 2 because that's when it's rebroadcast.
Okay. Right.
So what we're going to do the draw next Saturday. So all you have to do is guess Steve's age this week. 55.
We've run out of ideas, folks.
Or 77.
This is how desperate we're getting.
Yeah, this is how we're getting.
I get 2 things.
Just email me, Frank N at mortgagebrokersottawa.com, and I can give away 2 tickets and a premium parking pass for an upcoming game.
Even if you don't want to guess, just email Frank with nonsense regardless. Frank N at mortgagebrokersottawa.com. And just bombard his email and all. I just want to see that.
Here comes the spam.
I do have 2 things. Glenn, one of the super agents that I brought over from the Tracy Arnett team, celebrates 2 years with the company this week, and also it's his birthday in this coming week. So happy birthday to Glenn.
And if I wanted to buy a house in Toronto, how would I get a hold of you, Erin?
You can find me on Instagram at Erin Gregory Real Estate.
And what happens if you're someone who's not on Instagram?
Oh, if you're not on Instagram,
what's your email?
You can email me at egregory@royallepage.ca.
And do they get a kiss from Steve if they use your services?
If you're lucky. If
Yes.
you're lucky.
A Halloween candy kiss. Have a great week, everybody.
And for your former teacher, Steve's still available.
Oh, yeah, still available. Thanks for
Support local
having me.
business and charity.
You need money.